Inflation has ticked up again for the month of August, just days out from the new Reserve Bank Governor's first interest rate decision. A monthly indicator measured by the Bureau of Stats rose slightly from 4.9 to 5.2%. On Tuesday, RBA Governor Michelle Bullock and the board will make their first rates decision under her leadership. For his analysis, let's bring in Warren Hogan from Judo Bank. Warren, what do these numbers represent and what will the RBA response be? What should it be?
Yeah, look, Kieran, the inflation numbers today are highlighting this stickiness in inflation that we're seeing right around the world. The tick up in the month was largely because of petrol, which rose 9% in August and will go up again in September, unfortunately. But if you look at the underlying sort of inflation pulse, it's still up around 5.5%, and not coming down quick enough given where the RBA forecasts are at. So, look, it may not be enough to convince them to go again at Governor Bullock's first meeting. They may choose to wait for the official CPI, the quarterly CPI, which comes out in about a month's time, and go on that very popular day for rate hikes, which is Melbourne Cup Day.
But it's not just this monthly number that has you worried about, as you put it, the stickiness of the inflation.
No, I mean, we're getting plenty of evidence that cost pressures have started to pick up again in the last few months across the economy. There's obviously the effects of the Fair Work Commission decision on minimum and award wages. Wage pressures are burbling away and rising, not falling. Energy costs are staying elevated. And of course, now we're starting to get some hard data in the form of the CPI. The trimmed mean measure, which is really the core inflation that the RBA looks at, rose by more than 1% in the month of August. So we are seeing inflation still plaguing this economy. And of course, the real damage being done to people's living standards is this inflation. Rates are hurting, higher rates are hurting mortgage holders, and some groups are hurting a lot, but it's the inflation that's doing the big damage.
On that front, and in terms of the timeline to get inflation back to the target band of 2 to 3% that the RBA has set, is there timeline towards the end of 2025? Is it still reasonable?
Look, I think it is still reasonable, but their forecasts for having inflation at 4 by the end of this year do not look reasonable. And the problem is that our interest rates, although they've moved a lot and they're quite high by recent standards, they're still low by the sort of the big picture of Australia, the long term, and also low compared to overseas. We're seeing that with the Aussie dollar being weak. So, look, I think we still are on track to get inflation down to target by 2025. That's still a long way away. But I think the conclusion from the recent run of data on the economy and inflation is that you're probably going to need to see a couple more rate hikes to stay on that so-called narrow path where we get inflation down without a recession.
And it seems that you think that the patience that the RBA has shown about possibly not wanting to bring down inflation as quickly as some other central banks because they don't want unemployment to rise. Essentially, that's the counter argument. But you think that it's missing one of the key points here, and that is that cost of living pain that a lot of Australians are feeling right now.
Yeah, it really struck me when we got the last consumer sentiment reading out, which slumped back to its lowest levels. Consumer sentiment in Australia has been at recession levels for over a year. It's the worst run since the early 1990s recession, and it just shows there is trauma out there in our community, economic and financial trauma. It's not because of surging unemployment, but it's because people's living standards have taken a big backward step in the last 2 years. And the RBA doesn't seem to be in any rush to get it down. It seems to be supported by the government, and it's because they don't want to push unemployment up or hurt the economy through, mortgage defaults and business failures. But where's the trade-off? What's the right one? I'm questioning whether or not this sort of slowly approach to getting rid of inflation is right, because consumer sentiment is terrible and people are hurting out there.
Warren, great to chat. I'll see you soon.
Thanks, Kieran.